This is Dario, Certified Financial Planner, IHT Wealth Management, and today we're going to be talking about the purpose of life insurance. Life insurance has many purposes, and it's been serving us for many years. Just United States, many insurance companies were founded, let's say, in the mid of 1800s. Companies like, New York Life, Mass Mutual, MetLife, etc., Prudential, just to name a few, though. Purpose number one is that if you have a mortgage, you should have a life insurance for the purpose of mortgage protection. This is not a homeowner's insurance. You should call your property and casualty agent and ask for the homeowner's insurance. But mortgage protection means in case you're the breadwinner and you're making money and you have the family and you're paying the mortgage. In case something would have happened to you, though, and you would have passed and there's $250,000 in the mortgage balance left, you should have at least that amount of money in the life insurance so your family can pay off the mortgage and live in the house free of mortgage payments. That's the purpose of it. And the proceeds of that would be tax-free to the family so they can pay that off and continue living in the house. Purpose number two is income replacement, and we're going to switch that in two. First, income replacement for the breadwinner, somebody who is earning and making money, and the value replacement for the stay-at-home mom or dad, which certainly has some values in providing values for keeping the children, taking them to the school, cooking the meals, etc. So, which is in a range between of $75,000 and $125,000 today. So, if you are in your 40s and you have 20 more years to work and you make $100,000, you should at least have about $2 to $3 million in life insurance just from an income replacement standpoint. And the same thing would apply to to a spouse that's staying at home. Purpose number three would be the final expenses. Very often we are faced with the families that are struggling with paying off the final expenses for the deceased. So there's not enough money to pay for the funeral, the plot, the final expenses, some other bills, other administrative expenses that the estate is facing, etc. So for that purposes, there should be at least $50,000 to $100,000 in today's terms to pay for the final expenses. Purpose number four would be for small business owners or people that are owning any business, especially if you are having a partnership situation, that you have two partners, that let's say the business is on $1 million and the $1 million business in two is $500,000 each. Business owners should have a life insurance one on each other, so in case one were to pass, then that other business owner can pay off the family, and basically keep the other 50% of the business. But also a small or larger business that has a need for insuring the key person, that is a key salesman or key account holder or key technician or any other key position, should be insured as a key man, so in case that person were to pass away, the business has enough of liquid cash to hire a replacement that's going to be of high quality and value, is going to be coming in that business and replace the value of that individual. Very important would be, I would name that as number 5, as a supplemental retirement income. So not only we can use 401k plans, IRAs, and the individual investment accounts as a retirement saving plan, but we can use the life insurance as a supplemental where we can enrich and deposit more cash inside the cash value or index universal life or the whole life or variable universal life as far as a accumulation of cash value, and use that cash on a tax advantageous basis as a supplemental retirement income. And I would just name that as a reason number 6, would to buy insurability when you're young. I implore you, if you're a young parent and you are even single and you plan to be married or you're going to have dependents, so if you have them right now, you need to have life insurance and buy insurability, because if you're not insurable, you cannot have life insurance. That applies to your children. They will not have medical exams, and in case they would develop any certain conditions that will not make them insurable in the future, at least they will have a plan because you purchased them in insurability. So do that for yourself and for your family members. And in case you do have dependents, you must have independently owned life insurance outside of your group employer sponsor plan. Please review this, and in case you have any questions, feel free to give us a call and click in the link below and come to our page, and we can discuss more in details what particular needs you have about life insurance. Take care. Bye.